Okay, hello everybody, and welcome to our May 2023 IBD meetup for Madison Heights and Livonia, Michigan. We have tonight Raja, myself, Keith, Francisco, Talgent, Ron, and Cookie. As always, the content in this presentation and all the presentations should not be considered as recommendations to buy or sell, just a starting point for your own research. So take it all with a grain of salt. Market status as of this past weekend, so Monday morning starting AM before the market was open, we're in a confirmed rally. 4 and 5 distribution days, which is somewhat elevated. I mean, it is elevated, but our last meeting was the M here in April, so we was in a confirmed uptrend for looks about a week and a day. Then it was caution for about 2 weeks, and then Friday they switched it to confirmed uptrend again. So time will tell, I guess. The IBD accumulation distribution 6,000 lists, where would they bucket all the stocks and put them in the 5 buckets. April to May, we have the A's declined by roughly 200. Well, about 125. The E's have increased. So you can see how it's in a confirmed uptrend, but it's weighted. It's cautious. In the big picture over the weekend, I read it. They actually said they suggested 20% invested, which was, I thought that was a good way to put it. So it kind of gives you a guide, like how strong is this rally? They're saying 20% invested. Here's our Dow Jones Industrial Average, the daily. So the red bar, the bold red bar, is our last meeting. You can see how it pretty much it's drifting lower. This is the Dow Jones, so it's just drifting lower. A lot of red bars, even though it's not real excessive volume, but it's hanging out around about the 50-day moving average. The S&P 500, it seems tamer, even though it seems horizontal. It's again with the low volume, and it's holding above the 50-day, which is good news, but it seems to be just sideways price action. And the NASDAQ, which is the best of the bunch, it seems to be drifting higher, acting pretty well. And I don't know, I guess you'd say pretty much red to blue is equal and not really excessive volume either way. It's kind of just meandering along here, but it is above the 50-day. So this is our strongest of the 3 that we follow. This is again our last meeting where they all kind of converged. The NASDAQ, and the NASDAQ, it is the strongest of them all, and it's really following the 21-day, which is the green bar or the green line, and it touched the 50-day, and then it's holding well above it. So here we are. Here's our relative rotation graph, including the UUP. So notice from April to May, April's the left, May is the right. Leadership has definitely changed. Now we have communications technology, consumer discretionary, that's leading, even though it seems to be falling, but it is definitely leading. Our oil and energy it's in the lagging quadrant. Financials, XLE, here's XLE. Looks like maybe it's going to correct up. Who knows? But it's definitely change of leadership for sure. Here's our UUP. UUP is right in the improving quadrant. So that's how that's looking. IBD 197 subgroups, 3 and 6 month sort, the top 197s. This is roughly the top 10% of them, 20 or so. Notice the change, energy on the 3 month sort, 2, retail, 8. 8 subsectors are leading the market. The 6 month sort, energy, 4, and retail, 7. So I just call retail, leisure. I call apparel, I call all that retail. But it's definitely change in the weather. Here's our last month top 4 stocks. We had a pretty good month, actually. Cookie had the leader, the number 1, with TPH. Actually, it was a home builder, 3 home builders, and one of the Technoglass, which is a windows. I don't want to say bulletproof, but they are very strong windows, tempered glass for replacement windows. But 15%, 15.6%, and second was 15.1%. That's over a 30-day period, which notice the S&P, it actually declined. Not much, but it did actually decline. UUP was up 0.1, so quite a turnaround. Here's some stocks for tonight. Cookie stocks. We have Shockwave. Shockwave is a medical. Shockwave Medical, 35 of 197. Medical Systems Equipment. We have a sideways base, a long cup with a handle, just out of the pivot zone, so it's still within buy range. However, I don't know what it did on the market today. This is as of over the weekend. Nice long cup with a handle, tame. The 50-day crosses the 200, and it looks like the 50-day is just about to cross above it over here, 97 relative strength. Notice nice, big, heavy pocket pivots round about the halfway of the cup, which is exactly what you want to see. And then half to 3/4 of the way, you want to see your pocket pivots, and you got 1, 2, and probably this one here. So this is a top stock for sure. And base on base with a gap in the middle. So that's pretty powerful stuff there. Shockwave, 4 A+ funds own it. Up-down volume is 1.8, a measure of supply and demand, very strong. 1 is considered flat. 1.8 is very strong. Let's see. Accumulation distribution, A-, SMR rating A, composite A, very powerful measures there. Return on equity 32%, PE 81, so it's not terribly expensive, but it's not cheap either. Even though debt, notice 5%, very, very low. 16% R&D. Management owns 4%. Very strong stock. Earnings per share this year 7%, next year 29% increases. So this is, if you read IBD, you're certainly aware of this stock. This is something you might want to keep your eye on. Another one from Cookie, DUOL. I'm gonna hack it up here. It's a computer software educational. It's a language. It's a language software. It helps you learn another language or multiple languages. Subgroup 1 of 197, so it's in the top group software. Nice long cup or nice long base, broke out, 98 relative strength. It looks like it broke out over here on probably earnings, and notice the volume picked up overall in the last 3 months here compared to the rest of the chart. Looks like it pretty much doubles. It popped above it, then it's fading down as it's coming down to the 50-day, and then it lived there for a little bit, maybe a week, and then it's back above it. So it's acting pretty good. It has 4 A plus, or pardon me, 2 A plus funds. It's considered an IPO within the last 5 years, so it's a pretty strong stock. Up down volume 1, like I said, that's flat, so it's even. Neither good nor bad, but that's solid. It's acceptable. Accumulation distribution B, SMR rating D. So they're not. Well, the earnings they're just now starting to turn profitable. They were IPO negative, 4 years negative, and now they're turning the corner. So they are turning the corner. Next year, $1.08, which is down from this year, but let's see, R&D, 40% on R&D. It's something you might want to take a look at. Another one from Cookie, Array, ARRY. That's our solar. Subgroup 120 of 197. Very positive. We have a cup with a handle on the left-hand side, a gap between, a nice long flat base, and this was Friday's action, so very powerful Friday burst out up here, 16% in 1 day, and that pretty much goes back. It looks like it's highest volume on the whole chart, except for this red bar over here. But that was a while ago. So this is top stock and a top group. Well, actually 120 of 197, but solar is very strong. So there's 2 A plus funds that own this. And notice this year we have a 121% earnings per share increase, followed by next year 45%, and debt 580, which is high, return on equity 322, PE 36. The SMR accumulation distribution composite, that's all very strong, A's and B's. Keep in mind, certain states such as California, it's mandated that you shall have X percentage of new construction solar or renewables. So that's a big strength with a lot of these companies. And if you're into the solar, they do make devices that tap into the sun. So this is a leading stock in the solar field. Another one from Cookie. This is a hot new stock here. On Holdings. It's actually this past week's IBD cover page story. Their top story was shoes, and this is definitely a leading, possibly the leading shoe athletic shoe company out there. So take a look at that article. This is number 4 of 197, apparel and shoes. So it's definitely a top stock and a top group. Nice long cup with a handle. It broke out. And very strong, I mean, very powerful volume. I mean, this is pretty much from this point to the left, it was all above or at the volume average bar. And then after this point, it's pretty much above it. And it blasted off, and now it's still well above the 50-day, and it's coming down on low volume, which is exactly what you want to see, and it's advancing on high volume, which is exactly what you want to see. So this is a very powerful stock pattern. 97 relative strength. And let's see, 3 A+ funds have this up down volume 2.1. So that's very, very strong. Strongest one we've seen all night so far. This year, 54% earnings per share increase. Next year, 42% earnings per share increase. A's, all A's, 90, I mean, the highest ratings possible. PE ratio 114, return on equity 9. I mean, you're going to pay up for it. This is all over the IBD for probably the last month or so. And actually, like I said, in this article, which is a very good article, this week's paper, they mention, let's see, Deckers, Crocs, Skechers, and this may be the new Nike in a way. I mean, Nike's been around for quite a while now, so Nike is a mature company, but this sounds like it may be the new up-and-comer. But enter at your own risk. Here's another one from Cookie. We have Flywire, FLYW, 107 of 197. Let's see, it's a finance credit card payment. That's the group it's in. Nice cup, nice long cup. No handle, but a nice long cup. Small gap in between, and then a side or another base on base pattern on cup on base, and then it's sideways, hanging out right at the 50-day, and again with the big blue volume and the red small volume, which is exactly what you want to see. And 94 relative strength. It's actually 1% from the pivot, so it's right at the buy zone right now. So something you might want to take a look at. And earnings per share, pretty much this is okay. So this is a 3 A+ funds actually own this. IPO base, you can see it's pretty new. Loss. Now they're breaking through to the positive. Earnings per share next year, which is not that far away, 105% earnings per share increase next year. SMR rating C, which reflects the negative earnings, so that's improving. Accumulation distribution A, up down volume 1.9, that's very strong, very powerful. R&D is 17.4, so that's strong. Management owns 38%, so that's very powerful also. It looks like something you might want to keep an eye on. And another one from Cookie. Technoglass, TGLS. This was from last month, but it's carryover. It's very powerful stock. You can see it's just, I mean, whenever it touches the 50-day, I guess grab it. It's just nice tight pattern. Now it's starting to loosen up, but still it's very, very strong. I'm not sure, but it seems like Florida, I've been reading a few things on Florida with all their hurricanes. They're mandating that when they rebuild down there, they use stronger roofing materials. And I'm wondering, I don't know this, but I'm wondering if they're recommending this better glass. It's tempered glass, it's stronger. So who knows, but that's a nice looking pattern for sure. 98 relative strength, nice strong volume pickup. This year, 24% earnings per share increase, followed by 10% next year. It pays a dividend, small dividend, 0.8%. Debt, 48%, not outrageous. Return on equity, 53%. PE, 12. So that's a Warren Buffett type stock. He likes them, not outrageous. So that's reasonable. And then the SMR, accumulation distribution and composite rating, very strong, A's and B's. Up down volume 1.5. So this is definitely an up and comer. And there are 0 A+ funds though, however. Okay, and a bonus stock for Cookie. Let's see. We have this Celsius. This is a CELS. This is an energy drink. Cup. Cookie's saying she would wait for a handle. However, this is a top stock, so you may not see a handle, but nice cup, gap in between, and then a nice cup, and then it's just gapping up. So I take it that might have been earnings, and it's just riding above it. The 97 relative strength, all a solid blue over here, solid blue. Couple of red bars. That's it. So earnings per share 131, followed next year 196, 50% increase. It's just growing and growing and growing. $2 cans of Kool-Aid. No, it's energy drinks is what it is, but they're $2 a can. Up down volume 2.1. All of the SMR C, accumulation distribution A's, composite 96, timeliness A. So all very strong. It's just a very strong stock. 3 A+ funds own this thing, so might be worth taking a look at. And let's see, on the mine. So these here are what I'm looking at this week. INTT, in test. It's a number 33 of 197. Electrical, miscellaneous products, semiconductors, manufacturing. So they make tools, they make equipment to help you make your chips faster, better. Basically what they do. Looks like they had a cup, very small price action on the left, $7, slowly coming up. All of a sudden, March of this year, they're just slowly up. Now they're around about the 50-day, which is, you don't get much of an opportunity at the 50-day for this thing. And now it's coming down. There is red in here, but overall it looks The blue is higher than the red. So it's a strong stock, 99 relative strength. Even though, note, 106% from the pivot in 123 days. So they're calling it, it's doubled since, it's doubled since back over here, more than doubled. But it's leading stock in a leading sector. I just pulled this up. I never really heard of this before. So I said, what does Louis Navalier have to say? And this is his free portfolio grader. If you look at it, you can punch in any stock. This is not necessarily one of his recommendations, but I used his grader, entered the stock, and this is what it came up, and he's got an A on it. So return on equity 18, PE 17, up down volume 1.9, very high. Accumulation distribution B plus. All the others are A's and B's. Debt 19%. I mean, it's not out of hand. And there are 0 A plus funds. So, you know, this might be your hot money, I guess. Another one I got is, let's see, XPOF, Exponential Fitness. This is 68 of 197. Leisure Services. It's like a exercise studio. They have actually several different brands, but the thing that it's getting a lot of press in IBD. It's got this ascending base pattern, and this is a rare pattern. It's been my experience, if you buy it up here, sure enough, it's going to come down. At least my luck. That's how I've been having it. So I usually cut these in half, and it looks to be around about 25. So it's coming down to the 50-day. It's actually below the 50-day. They have earnings, I believe, this week. A lot of red volume. 2 above average days, and looks like about a week and a half of down days, but still, it looks interesting. It's the Can Slim news, so it's and then I seen an article where Peloton is with the COVID, we were forced to stay at home, and the Pelotons of the world and all that, those types of stocks, they exploded. Well, now the COVID's over, and Peloton is actually like $6 now. It was like $150. So now these other exercise places and the exercise shoes and everything like that, now it's their day in the sun, maybe. But this might be something to keep an eye on. Let's see. There is actually one A plus fund, and it has it's considered an IPO. It's a newer, recent IPO. So it's actually, they've lost money. This is their first year they're going to make money. They're going from -7 cents to +63 cents, and the next year, $1.24, which is 100% increase. This is interesting. It looks interesting to me. But enter at your own risk. B's and C's over here, so it's not the greatest accumulation distribution composite ratings. Still, however, it's getting a lot of press. Here's another one. NEWR, New Relic. New Relic is number 8 of 197. Computer software database. And we got the long flat base, small gap in between, and another flat base slightly above it. So base on base, it's not exactly horizontal, but it's pretty close. 92 relative strength, 8% tube pivot, so it's not extended. It's still within a buy range. I guess it looks pretty even. I mean, actually, it looks kind of like the red bars. The red bars are heavy. I mean, big red bars volume, which is not what you want to see. And then it looks like the blues are actually smaller, which that's not exactly what you'd want to see, but still interesting. It's in a top group. So number 8 of 197. That's what, plus the base on base. Let's see, 0 A plus funds, 154% debt. That's mediocre at best. I mean, really, SMR rating D, not very good. Accumulation distribution, it's right in the middle. So it's either gonna move or it's gonna go up or down. But it's not. It's kind of interesting. Management owns 21%, so R&D 27%. But notice the earnings. The last 2 years have been pretty bad. This year they're turning the corner, and next year 237 increase. So who knows? It's in a top group though. That's computer software is definitely leading. Let's see. Another one. Well, okay, so this is from that article that I read in IBD over the weekend. Skechers. Cookie had the top pick. This is probably maybe the next one in that article. SKX Skechers. Everybody knows Skechers. Let's see. We got a cup with a handle, and then it's just taken off. Not really taken off, but it's up. It's up pretty good. 50, 55. Seems to be pulling back in lower volume at the 21-day moving average. 95 relative strength. Not too far up. And let's see. 0 A plus funds own this thing. Let's see. 27% earnings per share this year, 24 next year. B's and A's for the fundamental ratings, accumulation distribution, SMR. Management owns 13%, debt 6%. I mean, that's pretty good. Return on equity 11, PE 20. It's not too expensive. Might be something you want to keep your eye on. And let's see. Meritage Homes, MTH. Homes are pretty hot. Number 2 of 197, building residential homes. They were 3 of our 4 winners of last month, so I looked at a few of them, and this seemed to be not too far gone. Nice long cup with a handle, and it's just kind of walking up, not too far gone, and more blue bars than red bars, which is exactly what you want to see. 0 A plus funds. Let's see. Notice this year they're projected negative. Well, most of the home builders, they're going to build less this year than last year. But next year they're supposed to rebound. PE 5, return on equity 28. So that's pretty positive. Debt 29. It's not too bad. And the SMR rating is pretty solid. B's, looks like straight B's. Earnings per share growth rate 51%. And finally, MARA, digital. This is about as close to Bitcoin that I've gotten. However, it is looking kind of interesting. It's starting to move. Notice how in the left-hand half of the chart, it was really below the moving average of volume. And then notice since January, it's all above. And just a quick eyeball survey, I would say more blue than red for sure. And the reds is lower volume than the blue, and it's 79 RS or RS rating. So it's kind of floating up, and it's right at the 50 days. So I believe it was up today like 7 or 8%. Who knows? But it's still 0 A+ funds. Even though notice how this thing is well, when it first came out, it did make money, but then it's never made money. This year it's supposed to turn the corner, 26 cents. Next year it's supposed to make 66 cents, according to this MarketSmith. And who knows? Enter at your own risk, though. That's all we can say. Okay, so here's our yield curve, U.S. Treasury yield curve. This is for today. Notice the 30-day bond, or I believe they call it a note, Treasury note. It's 5.5%. It's over that. And notice the rest of these. This green box is 90 days roughly. All of these that's 5%. These are 5.25. This is 5.5, just like I said. So that's less than 90 days. And then I got this green horizontal bar. I drew that in. Notice this over here, 20-year. That is almost 4%. So I'm not familiar with bonds, but I mean, I got to believe some people are, that's quite a deal. Risk-free. Who knows? Maybe it's time to put $1 or $2 in the 20-year bond. It's 4%. This is our last month's. Actually, last month, so 4/17, the 20-year was looks like 3.75. So I don't know how far it's going to go, but it's interesting. Okay, so remember our little flow chart here. Follow the market direction rules, track distribution days, buy the best stocks, buy at proper points, take profits regularly, and repeat. And that's it. Thank you.
Good job, kid.
Okay.